What's up, everybody? It's Mr. Second Passport. Today, I am going to share with you how I am currently making I get a steady, completely passive payment of $1,200 a month without having to do pretty much anything and without having to be exposed to things like the stock market or real estate or metals or anything of that sort. So, if you're like me and you're in the camp of you think inflation is not transitory, you think like the Fed is saying right now that it's here to stay and it might just keep getting worse and worse, kind of Venezuela style. I mean, there's reasons to think that. Then you might want to consider investing your money in something like what I'm doing now. Uh, disclaimer: this is not meant to be investing advice. It's just meant to be sharing what I'm doing, and then you can make your own informed decision and decide if it's right for you or not, which it might not be. So, for whatever reason, I mean, why do I think inflation's coming? And a lot of people do. I mean, look at the M1 money supply that's in the market here over the last 25 years. You can see the graph, and then this past year it just exploded, right? Now it's not just money printing, but there's a lot of factors that go into it. But whenever you see that kind of explosion in money supply, I don't think people should be surprised about what's happening with prices for goods and services. Official inflation data also reflects that, is starting to reflect that. You can see here inflation was very, very low, all from about 2012 all the way to 2020, in the 1s and 2%, and then it's just kind of starting to explode 5+% here in 2021. So these are all reasons why you can see that I think inflation is here and it's coming, and it may be getting a lot worse than what our officials are planning on, right? And our purchasing power is in serious jeopardy because of it, right? Any savings we might have, that's going to be getting eaten away at here pretty quickly. Now, why am I not a huge fan of the metals to kind of protect our purchasing power? Well, as you can see by any graph of the prices of gold or silver or platinum, um, like take the last year for instance, that gold is actually down -6%, while the S&P 500 is almost up 18 to 20% in just in the last 9 months of this year, 2021. Now, I mean, just look I mean, metals just kind of lug around and do nothing for really long periods of time, and then they can explode here and there, right? But for really long periods of time, they just do nothing. They don't pay dividends, they don't produce anything. And for me, it is just a form of speculation, right? When you buy something, hoping to sell it to someone who's willing to pay more for it than what you paid for it. So for me, I'm not a huge fan of the metals. I own a little bit of gold, but nothing really much to speak of. Now, real estate. A lot of people think I'm just a real estate guy or an international real estate guy. I talk a lot about international real estate, but I really am the first to tell you. Maybe it's strange to hear a real estate guy say you should not normally buy real estate, just rent. You should only buy when the deal is just too dang good to pass up. Other than that, you should just skip it. Why? Well, as you can see here, the average return on investment of real estate in the US, according to this source here in Google, is 8.6% a year, annual, right? Which isn't bad, but I mean, let's face it, you can do that and better just putting your money in stocks in the S&P 500. It's proven that over time. Now, over the next year or two, you never know what stocks are going to return, but over time, over long term, 5, 10, 20 years, you can pretty much count on that kind of return in the stock market. And real estate, as we all know, is a much bigger hassle than investing in something like metals or the stock market. Unless the real estate deal is just too good to pass up, I would say, in a way to kind of protect your purchasing power, I would say let's just kind of pass on the real estate, right, for now as well. Now, I do follow two markets in the US. Uh, Montana, Southwest Montana, Big Sky, Bozeman. Um, if you were fortunate enough to already own in this area, I've seen prices literally in the last 9 months uh, double, more than double. It's incredible, and I don't think it's very sustainable, right, in the Big Sky Bozeman area. I also follow where I'm from, right, in Cleveland, Ohio, the market there, where I also own a bit of property. And for long decades at a time, I've seen prices like from the year 2000 to 2010, even 2010 to 2020, I've seen prices literally go up very small here, like 3-4% a year. I've witnessed myself. But over the last year, I've seen prices jump like 30-40% in the suburbs of Cleveland that I particularly follow. So yeah, I mean that's not normal for this area, an area that's actually kind of losing population with time. It's one of those kind of dying cities in the Midwest. And if we talk about the third market where I own property here in Ecuador, uh, prices have almost just flatlined since the pandemic, since it's such a cash, you know, centric market, and there's been a lot of people hurt here by the pandemic, including my own business that had to do with tourism. So as you can imagine, it's just kind of flatlined here due to the lack of liquidity in a place like Ecuador. So if you've owned property in Ecuador, you've probably been wishing that you just would have kept it in the U.S. at this point. So this is why maybe owning real estate and real estate abroad not the best idea to protect your wealth, just to the hassle that's involved, right? Now you could put your money obviously in stocks, like something like an S&P 500 index fund, if you don't want to actually manually pick stocks. Um, but a lot of us just can't handle the volatility, at least with all of our savings, right? You can imagine, last year with the pandemic, the whole market went down about 31% in a matter of a week or two. If you remember that in March of 2020, and a lot of us, would not like to see, maybe can't even handle seeing our savings get almost cut in half in a week or two, right? So that's why maybe putting the lion's share of your money in stocks for some of us not the best idea. Although stocks do tend to return over the long term, 8 to 12% per year annuum, uh, right? So if you can hang in there and deal with those gut punches, like last March, then sure, the stock market is a very easy, hands-off way to protect your money, right? And it's one way that I like, but certainly not with all of my savings, right? So I mean, what are the other options here? Bitcoin, well, I'm not even going to cover that. I haven't dabbled much in Bitcoin. It's just too volatile for someone like me. I know myself, and I know I wouldn't be able to handle the big dips, and I'd probably sell out at the bottom and lose all or most of my money, right? If I dabbled in something like Bitcoin. And let's face it, rule number one about investing, I don't really understand, like a lot of people, the practicality of a thing like Bitcoin. I understand it's a new technology, but I don't really see the practicality in it just yet, right? So the only other option is like maybe bonds, but like long term, you could also invest in like ETF long bond funds, like this one from Vanguard, the EDV, the Vanguard Extended Duration. But then again, these funds, I've dabbled with them. I'll admit. And you can buy short-term bonds, but they just don't pay anything, right? Or you can go into long-term or extended duration bonds like this one here, or bond funds, and they're just so volatile. That's why I don't like it. They do have a very nice that negative correlation with the stock market, which is nice. Stock market goes down, these go up, but they're just so volatile in the meantime. I don't really like it for putting the lion's share of my savings. As you can see here from my own account here, this a couple days ago, I get paid every month about $1,200 cash right into my brokerage account, which happens to be E-Trade, and it's buying these TIPS bonds, inflation protected securities, right? And I'll admit, and anyone should admit, based on the data, over the last 10 years, TIPS, inflation protected securities, have been real dogs, real garbage. And basically, why is that? When inflation is running less than 2%, TIPS are going to pay even less than normal bonds, like what I just showed you, like an extended duration bond fund, right? But if inflation is all running hotter than 2%, you think it's going to continue to run hotter, then TIPS might just be for you, like they have been for me. So as you can see here, I just got paid here on the 8th, almost 1,200 bucks from TIPS. How can you invest in them? Well, it's really just open up a brokerage, and like the one I own, E-Trade or Fidelity works really good when living abroad. You don't necessarily have to be physically present in the US, but you kind of do have to be a US citizen in order to open, right? And then what you can do is, after you open, you just simply search for the ticker symbol like you would any other stock. In this case it's I personally own the iShares TIPS, TIP ticker symbol. And as you can see, it's just very, very steady upward trend. And you can see, even in the big crash of March 2020, there was only about a 5% dip, right? There's only about a 5% dip in the price, and it was very, very brief. And it came right back to where it was before. And I think most of us could handle a 5% dip if it's just for a week or two, right, in the lion's share of our savings. And in the meantime, you get a nice price appreciation, and you're getting paid monthly. So it's not quarterly, it's a monthly, basically dividend payment, in the case of this TIPS bond fund that I currently own. And it's paying really, really well because inflation is running so high. So, like, while metals do tend to go up in price with inflation, they don't always. It's not a perfect correlation. But TIPS more or less is, right? It's based off the CPI, off the inflation. And as you can see here, the real return that I'm getting on the 30-day, every 30 days right now, is 9.5%. It's a pretty incredible return, and that's being paid to me, right, every month, as long as this high inflation persists. So that's why I prefer something like TIPS over something like metals or real estate. So anyway, as long as inflation runs hot, I'm probably sticking with TIPS. I'm Mr. Second Passport. If you like this, don't forget to subscribe and hit the like button below.